Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options. Before we begin, let me know if you can hear me and see my screen. We'll begin shortly after. Bob, good morning. How are you? Can you guys see my screen? And can you guys hear me? Just want to make sure that you can see the screen and sound is okay. Phil, perfect. Good morning. How are you? All right. I'm almost ready. 1 second. Am I right? All right, let's start. Welcome to Tradespoon and Yaletown. I'm Vlad Karpel. I'm CEO and founder of both companies. Today we're going to have a live trading room open to trade stock and options. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. If you're new to trading stock or options, I encourage you to visit optionsclearing.com to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account for general education information purposes only. All right, very important to go over, again, pillars of trading: to be a disciplined trader, to be a mechanical trader, kind of repetitive. I think you have to embrace these concepts. One is process versus outcome, right? The economy of control. Retail numbers are great, better than expected, and the market, at least last time I checked, was pulling back, right? Dollar stronger, yield higher. When we had stronger employment numbers, market rallied. So you have different reaction to kind of similar news based on market conditions. The market overbought, oversold, and just how, and the idea of the game theory, right? How many, what are people thinking at the point that the news arrives? So process versus outcome is extremely important. Idea is to concentrate on things that you have control over and thoughts over, right? That you can prepare for the retail numbers or CPI data, but ultimately you don't know exactly how the market will react the next day or the day off. So I propose, in terms of what can we control, the most important is cash. I propose 50% of portfolio in cash. If you are in soft lending, in hard lending camp, if you're in no lending camp or soft lending camp, 30% in cash, right? So if you're bearish, you should have, in theory, more cash to deploy it because you think market is going to pull back further. Number of position and position size, right? This idea of portfolio drawdown. At any given point, if you end up on the wrong side, if you're bearish, like I am in market rallies, 20%, you don't want to be down more than 20%, right? You want to be down less, 10%, right? The market is up 20% and you're down 10, 12%, that's okay. So the only way you can do it, again, since you don't know when the market will rally 20% or when it will sell off, right? Timing market is different. The best way to address that is number of position size, right? And following the specific rules. So I propose 4 positions and 2.5%. Never risk more than 2.5% of your portfolio per position. Since we're doing dollar cost average most of the time or option laddering, per trade it's 1%, right? So you may be breaking to your position in 2, right? If you're trading options, maybe you have a put in March, maybe you have a put in June, right, or September, and you stagger them across different strikes or across different expiration months. If you're doing stock trading, then you put half of your position at one support level and half of the position at the other support level. So that is the most important rules, right? Everything else should fall in place, will fall in place as long as you follow the rules in terms of number of position size, and cash, right? So that's very important. We're all doing this to avoid kind of trading based on emotions. We're all humans. We get emotional when trade goes, when we do lose more than 10, 20%. And negative visualization, right? Negative visualization is important. So after the better than expected retail data, dollar is continued to go higher, right? That's been kind of the theme of February, right? It did pull back in January. It's pretty strong in In February, it did break to this 103.5 level, right? It's trading higher. I mean, one day doesn't set the trend, but assuming day 2, day 3, we're above this level, that should put a cap, or will put a cap, not will, but should put a cap on the current market rally, right? Because strong dollar, companies, so, that derive revenue outside of the United States will bring less revenue, right? So it's putting pressure on the revenue of multinational companies. Yield, right? Yield continues to trade higher, almost at 52-week. I mean, it basically retested 52-week high, 2-year yield, right? So again, the story today, higher interest rate longer. Now, actually, the futures data indicate that there is nobody, based on the implied futures data, nobody thinks the rates will be lower this year, right? It changed in the past couple of weeks, that higher interest rates will stay longer, right? So, and you see a rally in the dollar, and you see a rally in the yield. So, most people are bullish right now, right? I think short-term bulls are in control. We are trading. We're fighting for this 410 level, December high. That's kind of been the line. We'll see if bulls are able to hold on. But let's say you're bullish, right? Let's look at the... We'll look at the stock forecast toolbox. Let's say you are bullish. So model basically showing, without knowing retail data or PPI data tomorrow, basically says, as of right now, slightly negative bias in the market. 412 is overhead resistance, support is 407, potentially reaching 400 level. 403 level in the next 10 days, going into end of February. I agree with the model. I think bulls are in control. We'll see if the 410 level will hold or not. I think short term, we could pull back to 400. That a lot of support, 50-day, 200-day moving average, downtrend. That would be, I would propose to be a buy zone, right? This is where I would consider buying, around $400. If you're aggressive short-term trader, maybe this is your first support, right? That's the low for this week and last week, right? 2-week low. That's support number 1, pretty strategic, but that's more of a day trading, short-term trading, and then you have support number 2 is around 400, 402. But it's, I mean, this is your buy zone basically. This is your buy zone. I mean, your sell zone is February high resistance, right? So resistance 1, support 1. So let's say you're bullish, right? You think market overreacting to the retail data, and you're buying, right? Let's say if you think 410 level will hold, you're buying. 400 is your stop loss, right? If short-term trader, right? If we do drop below, I would give more room, right? I mean, we could drop, sometimes market does drop below 200-day moving average. We've seen that. Could be over-exaggerated. So I would be more conservative and give myself, 20 points. So either 10 points to the downside or 20, right? And that would be your stop loss. So that's the stop loss negative visualization. Earnings, I did do earnings, so I have to defend my DVN position, 59, right? So I sold the call, sold the put, actually 59. So now I have to defend it. So I do have 59 put. 59 put, and DVN is trading exactly at 59. So one thing I can slowly start think about defending this position, right? The option price right now is, let's see, what's the option price? there is no price, right? The market just opened. So I have to figure out, where it's going to, is it going to rebound and try to close this gap, right? That's one possibility. Or it can continue pull back. So let's see where the oil prices are. I mean, we do have a down day for now, right? Value down, QQQ down. Let's see, XOP is down, right? XOP is down, XLE is down. So energy is pulling back on a stronger dollar. So we're trading now 58, 57, so okay. So it doesn't even, option doesn't even have the price. So if I think, I mean, I can do half of the shares, or I'll do 100 shares. So now I can get into a cover call, because I can't really close the option. It doesn't even have a bid yet, but I can. Let's see, 58. Okay. But I can't sell short the stock, right? So at this point, it's inverse cover call, right? I'm bullish on the put, on the stock by selling the put. I thought we will not drop more than 8%, and we did. Right, so it's a move, beyond the estimated move analysis. And I thought energy is stronger, and got beat up that where it will hold the level. It didn't. So now I have a choice. Well, what's the option price? Is there a bid now on the option? Oh, it is. So now it's trading $1.30. So I can take a loss, $1.30, right, minus the premium I received, 17 cents. So it would be a $1.20 loss, right? So either $1.20 loss, or I can try to defend the position. So I sold 58.65 stock short. I'm down 35 cents. So at this point, I'm only down 35 cents, right? And as long as the stock stays at this level or going lower, right? Same profile as cover call, just inverse, right? Cover call, you have kind of this potential, right? This is the opposite. I mean, if the stock continues to go higher, now let me think about it. If the stock continues going higher, well, there's infinite loss, right? It's the other way, right? So this way. If the stock continues going higher, I have a short stock, I'm losing money, right? I lose money. So right, it's this one. If it's continues going lower, it's capped at the maximum loss. So sorry, it's this way. In theory, it's an infinite loss. Price. Sorry. This is dollars versus strike price. Stock. So the stock price goes up, I'm losing more and more money. Right. So as the stock price goes up, I'm losing more and more money. So it's this relationship. So the only way, right? So if the stock, let's say, reverses, right? If the stock reverses, then I would lose money. We'll start losing money, right? And I sold it at 50. Where I sold it, 58.65. So I sold it 58.65. If it jumps to above 58.65, right? If it jumps above 58.65, I'll be, this would be a loss. So now I have to watch this trade. All right, so at this point, the option is staying the same, but the stock price is gaining price, right? So at this point, I'm down $60, right? Instead of being down $130, I'm down $60. The longer I wait, basically what happens, the price of the option will decrease, and the price of the stock, the delta of the option will decrease, right? And the premium of the option will decrease. So I just have to wait and see. So let's see. So for now, let's watch the price. Usually you want to wait first 15 minutes to see where the bottom is. So 5,769, let's see. So for now, it stays the same, so it's 60 cents. So the risk is the reversal, right? The reversal, 59, and that's kind of where the price I bought it, so the gap. So that for now, I can just wait and see what happens to the price. XLP is down. XLE is down on a stronger dollar. Junk bonds pulling back 0.5%. Emerging market is down 1.5%. Metals and miners are down. So dollar-sensitive sectors are under pressure. The metals and miners, and multinational. Let's see, where is the dollar? So QQQ down 40 basis points, Spot is down 0.5%. Switch. So Airbnb had earnings 133. That's another earnings. So better than expected earnings in travel and leisure sector. That's kind of been the theme. And TTD. These are the earnings. Let's see, DVM. So it looks like it's bouncing back. Desi, that's great. Enjoy the weekend. I mean, the break. Good morning, Fred, Bob. No lending today. No hard, no soft. Okay. That is, you know, I mean, soft lending, no lending. We'll just have to wait and see. We're going fast. Fred, any changes in opinion on TLT? Okay, let me just look at one more time. What's the price? I'm trying to close DVN. So the short call is, short put is losing money, short stock is making money, and the difference right now still $60. So it's still $60. I mean, it's better than 130, but it's still not as good as 35, right? There's still 30 cents of time premium. It's Wednesday. This might be kind of the best case scenario, unless I want to break it apart, right? If I do see kind of DVN reaching the bottom and doesn't, right? Usually it's ABC pattern, right? There's either A, stabilization, and then C, right? So in ideal world, you close short put here, right? And then you close short stock, right? Because of the, you have a strong A, you do have some kind of a B rebound, and then C. So we're probably trading, 18 minutes? We're probably trading in B, right? And it could be short. It could be just, this is as good as it gets, and then kind of continues to drop. Let's look at Airbnb. Continues to trade higher. Let's look at 15 minutes. So TDD continues to go higher, Airbnb continues to go higher. All right, any questions? Ian, in terms, question was on British Petroleum. So the point was, it was the earning strategy, right? Similar to DVN, right? So I sold 32 put, and I sold the 37 call, right? So I collected 16 cents, and BP traded above my strike price on the call, right? So it traded above 37 call. So I had to close the 37 call, right? I closed the 37 call for 35 cents. I lost 16 cents, but the stock did trade above 38.5 call, right? And I got assigned basically shares. So I got assigned shares at 38.5. I closed it at $40.33. So this time, this hedge worked out well because the move was beyond 37 and beyond 38.5, right? And British Petroleum would just continue to go higher, right? So and this is the reason you don't want to be naked, trading naked options, right? Short calls or short puts, right? Unless you have a large account, because 90% of the time, these out of the money calls, they expire worthless. 90% of the time. 10% of the time, the move is exaggerated and it continues to go higher, right? So that's kind of the idea. How did I decide Airbnb to be on the watch list? So if you were at the closing bell, then you know that that I do earnings quite often, right? In my personal account, I have more risk tolerance level, so I would do these kind of very volatile stocks. These are smaller cap stocks. They don't really, well, Airbnb is actually positive earnings. And it's $85 billion, so it's not a small cap stock. I mean, it's a medium, large cap stocks. So because it announced earnings, I put it in my watch list, and I'm trading it in my personal account. DVN is a little bit less volatile, right? So all right, so let's look at DVN. All right, so let's look at what the price right now is. Okay, so at this point, it's $30, right? So basically, at this point, I can close the entire position and I'm down $30. So this is a perfect example where, locking yourself into a cover call, right, into market neutral strategy makes sense, and you wait for the time decay. So now I can close DVN. Short put $2, and let's see what 70 cents. Okay, and then I can buy back the shares. Okay. And then I do have, did I do naked? No, okay, and and I still have the 54 put. So I can close now 54 put and basically broke even on the entire trade. So that's good. Okay. right? And ideally you want to be out of this trade, the first half of the day, first half an hour of the day, because market can remain volatile. So now I'm out of BP. So in summary, I was able to collect 37 call, 32 put. Right, I collected 16 cents. I did close the. Sorry. So I sold 17 cents, collected 17 cents, and collected 20 cents. So basically 37 cents. I collected 37 cents. So minus 35. So I collected 35 cents. And collected, what was it, $2.20. So around 250, what is it, 220. So I collected 220 plus 40, 260, and I closed it for 270. So basically it broke even, maybe 10 cents up, 10 cents down. So that in this example, it worked out well, right? Because you can see DVN would continue to drop and follow the direction. A lot of it has to do with the market, right? A lot of it, one of the main reasons it's happening, not because, it's combination. DVN missed earnings, right? They did have deliver bad earnings, but they were trading at $60 after market. But you have this huge drop afterwards because of the retail numbers. The dollar got stronger. That's not good for energy, and XOP is down 3.5%, right? And you have a big pullback in energy. So you have kind of two contributing factors. One is the market conditions, one is the stock. You cannot undo the negative earnings results, but you can undo the energy, right? You can have reversal, right? Dollar, is gaining momentum. If dollar reverses, right? If dollar reverses, then DVN is also going to reverse, right? It might not close the entire gap, but it might rally. So you have to be careful. In the ideal world, when you do this day trading, first half an hour you want to be out, right? Because the second half of the day there could be reversals in the market. For now, dollar continues to rally, right? Dollar continues to rally. And let's see, 2-year yield, I think, is actually dropping. So 2-year yield actually dropped, right? Pretty volatile as a result of yesterday and today, right? It was down 4.4, then it was up 4.almost 8, and now it's down. So it's pretty volatile. High yield is down. So again, you have this divergence, right? In theory, if yield drop, then QQQ should be up. It is turning positive. So that's good. So still you have mixed reaction. 2-year yield drops, so that's good, that's positive. But dollar rallies, and that's negative. That's why you see value stocks are down 60 basis points, technology is down only 40 basis points. And spiders continue to trade, fight for this 410 level. All right, any questions on the BP trade? Sorry, BP trade or DVN trade? Or Airbnb? Ian, thank you. Thoughts on silver and gold. In theory, a strong dollar, let's see, strong dollar should bring, the silver should be down, right? But we have mixed picture with yield, so we'll see. Silver should be down. Right, silver is down. Silver is down as long as dollar, right? We talked about the most important right now. Interest rates are not even as important right now, because kind of there is a disconnect between equity market and bond market. But as long as the dollar continues to rally, right? It's a little bit overextended. It is reaching this overhead resistance. Right? There is a lot of overhead resistance at these levels, so I think it's overbought, right? But in theory, it should do something like this, right? Something like this, March, April. right? And then continue going higher, right? So that would be hard landing, right? That would be a hard landing scenario. Obviously, no landing, right? No landing, soft landing, however you want to call it. I mean, no landing just means it's higher, much higher than the soft landing, right? But irrelevant. In both cases, dollar should drop, right? Dollar should drop. So the most important chart is a dollar, right? You'll have, as long as the dollar continues going higher, and that's silver, right? They're opposite, right? So dollar continues going higher, silver continues to drop. I think in both scenarios, both camps, right, hard landing and soft landing, they do believe dollar will drop, right? That eventually dollar will drop. It's just the question is the time, when. Right, soft landing, no landing, they actually think it should happen now or very soon. Right, hard landing basically says no, it's going to happen, towards the end of the year, right? Towards the end of the year. So again, both camps could be right, but timing is different, right? Just like it's difficult for no landing and soft landing to decide when the dollar is going to drop and when the market is going to continue going higher. Same, it's very difficult for hard landing to also time it. But right now, I think the no landing and soft landing narrative should be on pause in theory because the dollar continues to make new highs. I mean, it's overbought, so it might pull back. So that's the chart I would watch. So for now, silver is down, right? Pretty big pullback, right? That was one of our scenarios. We asked, should I buy silver or gold here? And said, wait for the dollar to rally. So if you want to, I don't think we're going to break this level, right? This is intact. We already pulled back 50%. So you might want to consider buying, right? Small percentage, small silver position. Let's see, is it on my list? Maybe we'll just do that. Yeah. Maybe we can initiate small silver position. We do have silver. Okay, so I would just, again, I'm going to buy silver here, right? And if it drops, when is the next level? Probably here. Buy again, right? But it can be volatile. So I would mix the idea that if it does drop here, you don't want to be down less than 2.5%. So we've seen that silver could be volatile, right? It just dropped, 10, 30%. So it could drop another, 10 to 15%. So if it dropped, let's say I'm buying at 20, and if it drops to 17, I want to be down $250 on $10,000 account. So I have 100 shares to play with. Right, so I would buy maybe 50 shares, maybe 30 shares right now, something along those lines. But it's going to be volatile, and again, timing dollar. Right now, dollar is kind of an uptrend, but it's overbought, so we can kind of trade it around this position. So trade stock, silver. So that's how we determine, right? So everybody has to decide on their own based on their risk tolerance level and their portfolio size how many shares to buy. But doesn't matter what the size of your portfolio is. If silver drops, let's say, to 17 or 18, if the dollar actually rallies stronger, right, then you want to limit your losses to 2.5% if this level is broken. So it could. I mean, it already dropped. What is it? 10%, right? It already dropped 10% or 15%. It could drop another 10 to 15%. I don't think that's the case. I think that's the worst case scenario. This level probably will hold if I have to choose. So, because if this level breaks, then this is the hard landing scenario, right? At least right now, it's not a very popular scenario. Not a very popular. I mean, one of the favorite buys of no landing or soft landing is, silver and gold, right? This is one of their core scenarios, core holdings, just like FXI, China, right? And you can see China is also pulling back, not as much as silver, but I mean, it pulled back significantly, 10 to 15%. All right. Any other questions? Airbnb continues to go higher, DVN Energy continues to go lower. TTD continues to go higher. ADI is up. So these are all companies that are announcing earnings today. And spiders are kind of just fighting for the 410 level. They're fighting for the 410 level. So we're below. So the main support, I would keep an eye on this 4877, right? 448. So model, I think, is doing a good job to determine what the key support levels are, which is 407. Right. So for day trading, maybe it makes sense to go long around 407, 408. That's what model was called. So spiders is down 60 basis points, QQQ down 70 basis points. And everybody's just digesting the news, right? They're digesting the retail numbers, right? Expectation 2%, came out at 3%, so a lot higher than everybody expected. Manufacturing index contraction, retail vehicles, strong retail sales, industrial production is 0. I mean, producer price index, I don't think it's going to be a big surprise, right? I assume it's going to come in line with expectation, just like CPI. Higher, right? Inflation higher, higher, interest rates higher for longer. I think that theme is going to continue, but that there's a disconnect between, at least for now, bond market and equity market. 2-year yield continue to drop, right? That's bullish, right? We have steepening of the yield curve. Steepening of the yield curve. So which is positive. Should be positive for the market. But market is under pressure, and I think the main culprit is dollar. Right? Dollar fighting for the strong 104 level, right? That's kind of it used to be support in December, January. Dollar broke through the support. Now it's trying to break above that level. And I think that's what's pushing the semis down, spiders, small cap stocks. So I am in silver. Just bought silver. Fred, any change in opinion? I think, again, timing is difficult, right? I've been wrong on time. I was bullish kind of probably 3 to 6 months before it actually happened. But I'm bullish on TLT, right? In both scenarios, soft landing, hard landing, no landing, TLT should continue going higher, right? This is one of the most popular trade out there, right? Just buy bonds, money market pays you 5%, 5-10-year yield pays you, 3, almost 4%, 2-year yield pays you, 4.5%. So everybody is moving to bond. Is there a risk to that thesis? Yes, it's like super hard. It's a hard landing, not because of the recession, but because of both recession and the reemergence of inflation, right? Like CPI data is back up, right? A little bit higher. Yields are kind of not reacting to that. And they are. 10-year yield is retesting January high, right? December, January high, and 2-year yield retesting 52-week high. So if we have a couple more CPI prints like this, where it's 0.4 and next one maybe 0.6, and CPI data, 6.4, 6.5, maybe next one is 7.0, right? Because now the comparison data, especially year over year, inflation is going to be against lower benchmark, right? Inflation probably during summer already start pulling back, right, in summer of last year. So second half of 2022, inflation already start dropping. So the year-over-year comparison is going to have hard, unless goods is already dropping, so services inflation, services component, and the wages component have to start dropping. If the wages and the services and rents are not dropping, then this year-over-year data is not going to continue to drop. And it could be reversed. The prices can start going up, especially if the China reopening, oil prices going up, energy prices go up. So in that scenario, if we do have a jump in inflation, then TLT will drop. TLT will drop. If I have to guess, this is the bottom, right? There is 10 points to the downside. I think we will close this gap, right? Maybe we're not heading toward 0.5% interest rate, but even if we drop to 2%, we should recover half of these losses, right? So it was down 40%. We're probably not going to get to this level anytime soon because interest rates are not dropping to 0 or 1. But if they drop to 2%, we'll be halfway. So eventually we'll get to 124, 128. Soft landing will say this is going to happen, in the next couple months. Hard landing, guys, is going to say this is probably going to happen towards the end of this year, right, or early next year. But meanwhile, you're collecting coupon, right? You're collecting coupon, and as long as you think that the prices are going to go back at least to 125, 128, it makes sense to wait. So my opinion hasn't changed. That DVN is a disaster. Yes, it's a disaster if you didn't hedge. If you didn't hedge, it was a disaster. I do agree. I mean, if you did buy stock, then it was less disaster, right? Sell short stock, right? So I did sell short DVN. I know you came late, but again, you either close it at the beginning of the day, right, at $1.20. Was the first 5 minutes, just close in the morning, because you always have that continuation. I mean, market, it could rebound or it could continue. On a day like today, when dollar rallies, more likely than not, it will continue to sell off. So if you did not short the stock, then it would be a problem. I mean, still within 2.5%. But if you shorted the stock, then you basically almost broke even. Part of Ian. Yeah, so dollar is dropping against basket of currencies like euro, Australian dollar, Canadian dollar, Japanese dollar. So there's a basket, I don't know, 10 of these currencies that it's trading against. So yeah, I mean, it's short term, it's since beginning of February, it's continued to go on higher, but it's overbought, right? I don't know if it's going to break through this level. If it breaks through this level and reaches 105, I think that you'll see more pressure on the market. At this level market condition, would you buy BRKB, right? So Berkshire, VTV is kind of the same thing, right? I mean, 2022, it's, what is it, down? So from let's see, let's do it January 4th. I mean, from January of 2022, it's flat, right? It did not go anywhere. How much dividends are paying? I don't even know if it pays dividends. You got to always see if it. VTV is kind of similar, right? From January 3rd, VTV is actually down slightly. Okay, so maybe it's higher. So again, it depends on in what camp you're in. If you're asking my opinion, I think it's overbought, right, along with other value stocks. And I mean, trading, you can do trading anything, right? Because short term, I'm bullish. Like short term, in the next month or two, I think it's a pattern of higher highs and higher lows. So for trading, you can trade anything if your time horizon is a couple months and you want to trade it, 5% up, 5% down, no problem. If it's an investment long term, I think it's overbought and it's going to have a hard time breaking through this level. Right. I mean, it could jump to 320, right? If the market rallies, it will rally. I mean, maybe it will do this, but I still think, I don't think we have, we will, my opinion, we will have a recession this year, right? I'm in the camp where I do believe we have a recession this year, not a popular opinion. Totally get it, right? It's never is when the market is at 52-week high. So that makes sense. But I still think we're going to revisit. So if I had a choice, I would buy Berkshire Hathaway here. When is it going to happen? Probably Q2, Q3, right? Either late Q2 or early Q3. But as we approach in May, I think we'll have more evidence of a recession. Right now, there is no evidence, right? Earnings are great, okay. Earnings are okay, not great, okay. Unemployment is very low. Consumers economy, consumers spending left and right. They're traveling. They are buying, cars. So there is no signs of recession, right? The now narrative is no lending, right? No lending. So that's not the most popular opinion, but it's an opinion. I would not ignore that opinion. So if you're in that camp, it's too early to buy Berkshire Hathaway. If you're in a soft landing, hard landing camp, still even the soft landing, they don't, they do understand that we can revisit this level. So maybe you, just like with silver, maybe you buy a third position here, right? And you buy a third here, right? Because you don't know. And then you buy a third, right? So I think that's totally fine, right? Because soft landing can happen, right? Jerome Powell came out and he said, like, listen, I believe that we can avoid recession, right? So if Jerome Powell thinks we can avoid recession, then you have to put at least some kind of probability that is a, it is a likely scenario. You can't ignore it. Stagflation for TLT? No, stagflation. If the market, I think if we have stagflation and eventual recession, the only way to fight it, Fed will lower the rates. They might not be 4.5, they might not be 0, but they will start lowering, right? If we're gonna get into stagflation and eventually a recession, Fed will lower interest rates. So both hard landing and soft landing believe that rates are going down. The only way rates will not go down if we have second leg up in the inflation data. And a lot of people believe in that, including myself. It's just the thing, this is not going to happen this year because Fed, but at some point Fed will lower interest rates to 2% because of recession or because of no lending, and then inflation will come back. But that, it could be, a couple of years from now. Lots of cross currents for bond prices. Yeah, definitely. You can see Spiders is down 30 basis points, QQQ down 30 basis points, value down 0.5%. So we do have a recovery, but you do have a big sell-off in gold and silver, right? GDX also. Airbnb continues to rally. TDD continues to rally. ADI is up 5%, DVM down 11%. All right, any other questions? Excellent management of DVM. Obviously the trade didn't go my way, but you have to be able to repair your trades, right? And this is one way to repair trades. And in general, for this market, I would be building market neutral strategies, right? Half of the position long, half of the position short, right? In day trading, in this example, you just don't have a choice, right? When you sell in these options, and this is very favorite strategy, right? Half of the volume are weekly options. So this is not something I invented. But in general, when you have these moves to the downside, at the open you have to make a decision, right? You either close the short call. The problem, they don't have bid the first 2 minutes or 5 minutes, so you're kind of stuck in a short put position. So you can sell 100 shares, 50 shares, but think about how to hedge these stocks, and that's why. The reason I'm doing the $50 or $80 stock is because this way I can limit myself into this $250, maximum exposure, right? Maximum exposure. Thank you, Fred. Todd, right now, the problem right now, we're already at 9:30. So right now, it looks like, again, right now, it looks like it's building the bottom, right? So you have the strong A. You do have some kind of consolidation, right? It could be here, it could be here, right? Hard to predict. But then usually towards the end of the day, you're going to have another wave, right? So you're going to have B, right? And then C. Usually you will have C. This is, last earnings, it was down 13%. I don't know if it helped. It doesn't, doesn't have to be this way. Right, last earnings, it dropped 13%, right? It was as high as 14. So 13, 14%. There is a support, right? You do have the support that it's trading at January low. So I wouldn't short stock now. I would wait. You have a stop loss, right? If it drops below 56.35, if it starts dropping below this level, I would get out of the trade, right? So where I would get out from the short put, because that's the bottom right now. Ideally, if it reaches, retraces half of that, 57, 58, I would consider closing the short put. So you either close the short put if it drops below 56.31, I would be out of this trade, Or if it retraces, you maybe close half a position or entire position here, maybe half our entire position here. Right? I doubt it's going to get to this point. That's very unlikely that it can, get to the session high, but it could get in the middle of the range. Could get to the middle of the range and then drop. A lot of it has to do with dollar, and at this point, a lot of it has to do not with the earnings, but with the energy. Right? It just happened that today, not only not good earnings, but also oil had a big drop at 3%, right? So, if the oil didn't drop, if the oil rallied today, most likely this would be a winning trade, right? It will probably that 58.9 level will hold. But because there's additional drop in oil prices because of the strong dollar, that's the problem. It looks like XOP is recovering, so I would watch both, right? XOP can get to this level, 138. So if XOP gets to 138, this is your sign to close the DVM. If it drops below this level, right, because this is the wave C, right? You can clearly see wave A. You're going to have wave B. Most likely, you're going to have another wave C towards the end of the day, right? Usually towards the end of the day, the last hour and a half, you're going to have wave C. So this is your time to kind of decide to close your short position. If you want a short stock, I would do it somewhere in this region. Sell short. Now I think it's a little bit too late. Thank you, Todd. Bob, if dollar goes higher, you can see oil will continue to drop, right? Oil doesn't like strong dollar. Doesn't always have to happen that way, right? I mean, you have China reopening, if demand all of a sudden jumps. But in general, at least as of right now, there's a clear correlation between dollar and the oil. Fred, UNG. I mean, it does, right? I mean, pretty steep C, right? Probably D and E, right? If I have to choose, I mean, it's probably pretty steep drop. It does basically, you might squeeze D, 10, 12, 14, you might. But it does, but you have a clear stop. Yeah, you have clear kind of exit strategy here too. If it drops below, 8, I would probably get out of this trade. All right, guys, it's 8:29, 9:29. Sorry, it took a little longer. We had to manage this losing trade. I apologize. You can clearly see that, combination of both earnings and, strong dollar and drop in oil prices, that's contributing to the price action. All right, thank you very much and have a great day. Scott, today is Wednesday. Scott will do the closing bell. I'll see you guys tomorrow morning. That's your thing. Fred, thank you. Ian, thank you. All right, guys, thanks a lot, and I'll see you tomorrow.